All right, so stocks came out of the Easter weekend holiday like they're still on holiday. So very, very quiet day, very typical of a Monday, of a normal Monday, right, where there's no events over the weekend and nothing to roil the markets. But you got a little bit coming up this week, a big earnings season, and so we'll talk about what the indicators are telling us. We know there's a little bit of a rally, as kind of a roller coaster, but tech stocks did well. So we'll break that down, what it looks like, what did some other, what were the different trends going into this market and are going into today, and did those trends hold? So we'll break all that down. We'll talk about some of the major asset classes, especially the dollar, and why is the dollar so bullish? Why is the dollar index so bullish? So we'll break that down as well. And then we'll take a look at our trade idea of the day on a stock that's in a discretionary space that had a good rally, and we'll talk about whether how to trade a stock that's been in this bearish trend that's kind of been rallying towards resistance levels, and how can we trade it now that it's here at those levels. So let's go ahead and get started. Today is Monday, April the 18th, 2022. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's take a look at the S&P 500 with the market forecast indicator, and you can see the down day we had ended up being about as flat as a pancake here, down 1/9%, so 0.02%, really, really flat, very small range, well below the average there. But it kept, we stayed below the 30-day moving average, though less than about 0.75% below. The intermediate line's still going down, but still in the upper half. We haven't dropped below the upper half yet. The market sentiment line's rising. It's kind of fluctuating up and down here, but the very low end of neutral territory, high end of bearish territory. And then if you can see your near-term line, the last couple of days, or today, because of the last couple of days, has dropped back down into bearish territory and into oversold territory again. In fact, if you look, the near-term line hasn't been in bullish territory for a few weeks. It's been this gradual decline. I mean, yeah, we've been in the upper half of the chart, and we've gotten out of bearish territory a couple of times, but not long enough to get it up into bullish territory, much less. I mean, that was a good intermediate run that has pretty much, for the most part, ended. You'll see it on other indexes has ended, more so than on the S&P 500. We have dropped below the 38% retracement of this intermediate run that we had. We've dropped below 23. That's when the intermediate run starts. Then you have some support at the 38, and you have broken that. So, you're definitely on an intermediate decline, according to that figure. If you look at the Russell 2000, you can see it's got dark pink shading in the green line. It has broken the 62% retracement level of same intermediate run that ended with a overbought cluster, no less. Its intermediate line is in bearish territory, and it's actually back below its long-term market sentiment line. It's rising, but it doesn't matter what it's doing inside of bearish territory, right? It's still at these lower levels. And you can see the near-term line did get into bullish territory. We had a strong enough rally there, but bullish territory, but it didn't stay, and didn't get in the upper reversal zone. So that's about as bearish of a near-term peak as you can have. Because now, like we see, the S&P's been in there this whole time. It's a pretty long run. This is starting a new near-term run for the Russell 2000. So a pretty bearish peak there. And then see your NASDAQ, the intermediate line, at least it's not in bearish territory yet, but it is in the lower half of the chart. So you have dark pink shading because of that. It's the market sentiment line still bearish. You can see its near-term line got into neutral territory. It's back down oversold. It did break the 38% retracement like the S&P. It is flirting with trying to break the 62%, unlike the S&P. But the thing about the 62% on the NASDAQ is it also aligns with this 23% retracement of the market sentiment decline that ultimately ended with that oversold cluster there. This market sentiment decline. So that means this big long-term decline we're on ended when you got above the 23% retracement. We started to retrace it. We got up to resistance, and then now, see, we got up to 62%, and now we're flirting with breaking back. So that retracement ends when either you break back below the 23 or above the 78. And so we are really trying to hold on So you got multiple support levels here, some significant support levels that if you break, then you're on to a bearish move. And see, we already did talk about the Russell 2000. So that's kind of what we're seeing right now. If you look at the weekly chart, the Hakinyashi candle chart you can see it's a weekly bearish candle so far this week. We got below the 10-week moving average. We got the red arrow. The PPO is falling. The differential is negative. So you have the three things that make you bearish on this chart. Same thing on the NASDAQ. The difference here is the NASDAQ's already in this death cross environment with the 10-week below the 40-week, and they're both falling. But you got a red arrow 2 weeks ago. PPO is falling, negative differential. And then your Russell 2000, negative differential, right? You see that down here. PPO falling again, red arrow. So in multiple weeks in a row, and no upper shadow. So now we're not closing below last week's low on the Russell or on the NASDAQ. We are kind of flirting with it. See, the low point there is at 13,882, and the close right now is at 13,889. So we are flirting with that, but not as bearish, or a little bit more bearish than the Russell. And this one's too, same thing. The low is at 43.81, and we're closing right now at 43.89. So depending on how more bearish we get throughout the week, we can bring that Hakinyashi close down lower and make this more bearish, closing below that low. So it's really important to see how we kind of finish out the rest of this week here. So let's go to the 3 green arrow charts. And you'll notice again we got light pink shading again here. We only went a day, so like really 4 out of 5 days light pink shading. The full 5 days in the Q. We have 8 days of pink shading in IWM, and we haven't had a single day yet on the diamonds. We still are not below that moving average, so the diamonds have been holding up a little bit better. But this is bearish. Like, when you're bullish in a bullish trend, you only get like a day or two of pink shading, and you're back up. The fact that we're not getting back up here says, that's what it says about this move. It's not, this isn't just a normal pullback to the downside. Remember, the pullbacks are right now to the upside, not to the downside. You can see the S&P, we broke the 30-day, but we also broke the 50-day. The 8-day it's dropped below the 17. It's falling below its moving average. We're still easily below the 17-day moving average. Now you're looking for the 8 and 17 to cross below the 30 and 50 as well here soon. If you look at the Qs, the 8-day is already crossing below the 30 and the 50, and the 17 days really close. So the Qs are a lot more bearish, and you can also see too that the Qs, there's some significance to that same line that we talked about, because there's some volume there that we'd be breaking down below and all the resistance above us, and we're in this death cross environment there with the 50-day below the 200, and you're not it is a little bit of a death cross in the S&P, but not as significant as what you see on the Qs, and especially on the IWM. We've been in a death cross in IWM since the beginning of the year practically. These have been below the 200-day moving average since the beginning of the year, before the beginning of the year. And you can see the 8 and 17-day moving averages are both below the 30 and the 50-day. And we are back below this long-term market sentiment decline. We are back down below that 23%. So we are starting a new retracement to the downside. Had a nice little rally here the last couple of days, but it appears we hit resistance and now rolling back over on that. Looking at some of these oscillators here, S&P, your negative indicator is still above 25. Your positive is easily below 20. So you can see the negative moves there. Same thing on the Qs. So really bearish in the positive indicator and still easily above 25 on the negative. And then IWM, it had been a little bit less bullish or less bearish. It's back above 25 now and still below 20. So, again, you have to get above 30 to get the ADX to rise. But, to have at least the inklings of a trend, that's where you need those indicators to be. We are in the lower half of the chart on the S&P, or below minus 100 on the CCI as well. When you look at IWM, or the Russell, again, lower half of the chart, flirting with getting back below minus 100, and then your NASDAQ, same thing, below minus 100 in the lower half of the chart there. So bearish results in all of those. From an Ichimoku cloud, again, we're in the cloud on the S&P. We don't have a trend going, so still pretty noisy day, which makes sense with all the little volume. IWM did get back below its cloud today, just barely, but it's below its cloud. It's very, and we don't have a trend going there. We haven't had a trend going here for quite a while. It's been very noisy on the Qs, or IWM. And the Qs, you see, again, had a bullish trend going, and it's also just slightly below its cloud there. So it's, it needs, by the time we get to the green, we need to be back above it if we really want to be bullish, like we are over here, where we had that pullback, and by the time you got to the green, you were back above it. That's great. We need to be back above it. And right now, the odds of that, and that's going to be after the Fed meeting, right, at the beginning of May. So the odds of that right now, not so good from that perspective. Looking at the Bollinger Bands, you can see we are floating with that lower quartile again in bearish territory below the point of control. The Qs, we are easily below the point of control, and we are flirting with that. We are at the top end of the lower quartile there. And IWM, same thing, flirting with the lower quartile, below the point of control, below the whole entire value area, and flirting with getting back below this one little volume node that you actually have that's outside of the value area. So you can see the bearishness, right? There's lots of bearish signs. Nothing right now really looks like, it looks like we're going to reverse to the upside here. It just looks like we're kind of grinding in this slow mode to the downside here. Let's look at the volume. Today, like I said, the range was so small, 4 points, just over 4 points. Don't have to worry about a gap. The volume was 66 million shares trading hands. So when you look at that here, and again, remember, we're below moving averages, so you don't want to have small volume days. Those aren't good bullish days to have small volume days below moving averages. On one hand, at least we're not, tanking, but on the other hand, we don't have to tank, right? If, you get your biggest down moves and your biggest up moves, and you typically don't get your big up moves until you've had some big down moves. And you can see we haven't had a big 2% down move. We got it kicked off with one, and then we started again at the beginning of the year, almost quasi 2% down move there, ended up being 1.92. But you can see we're not like, but again, you'll notice you get your biggest up moves after you get these big down moves, and we've hardly had 2% down moves here to the downside. So I don't think necessarily that, we're just kind of grinding. You're going to be in grind mode if you're just getting 1% drops, then you're just going to get half to 1% rallies, and that's not going to be enough to break you out of this move where to get the historical volatility up, right? So you have to get bigger ones to get the historical volatility up here above implied. But we had historical volatility rising. If you notice, we had big candles, 2%, 2%, but then we've been grinding, right, with just barely more than 1%. So historical volatility has actually come back down below a still elevated VIX. So that means we're still kind of in this bearish mode here at elevated levels, right? You can see the VIX right now, if you follow my left line to across, it's still an elevated level relative to what we've seen in the past. And if you look at it here on this chart, you can see we're still in kind of bullish territory from a risk appetite standpoint because you're below 90%. But when you look at it when you look at the VIX here with these different moving averages, you can see we're still kind of in this mode. Like the MACD is still above its moving average. You're just barely below the 17-day moving average after getting barely above it yesterday. So let's see what it does. Let's see if we break back down below the 200, break back down below 20. Now you're looking at a significant decline in volatility. Now we have an opportunity, but we had this pattern right here, this bearish pattern. We followed that up with some bearishness, and you saw that what happened, that we started getting smaller, the historical volatility dropped, but we're not, we're still at 22, right? We're not down in the teens, which is where we need to be if we're going to be trending higher. We had a nice good 4-point move today, which is down here according to the compared to the average, and 66 million shares. Well, that's where we are below the average, but we're not like 1% we're just barely below 1% today, and that's just one day. And you need more of that, but you need more of that above these moving averages. You need more above that when you're above the 200-day moving average, and that's just not the case right now. So today was a nice quiet day, but it was a post expiration. It was a tax day. You have earnings, financial earnings. You don't have a lot of major earnings this week before like the big large cap tech names. You have a few this week, but it's kind of a quiet week from an earnings standpoint. And of course, we've already had inflation, and you've got the FOMC coming up in just a couple of weeks. So, and a few big earnings weeks coming up after. So it's not surprising that today of all days that you just kind of get a little bit of a pause, and we had some bearishness going into it, and we'll see if that's the trend of the market coming out of it. And that's kind of what I expect, because that's the kind of market we're just in right now. Until I see otherwise, right, on these indicators that I showed you, that are all showing bearishness right now, and none of them are really showing signs of enough bullishness to change that. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. And then with their tweet, with the Twitter Market Outlook tweet, reply to that tweet with what charts you're looking at, right? What charts do you see? Take a picture of it. What do you see on Twitter? Reply to that tweet, to my Market Outlook tweet that's pinned to my profile, with what you're seeing, what makes you either a lot more bullish than I am or a lot more bearish than I am. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked your video today. And number two, you want us to do another video again tomorrow. It's a quick way to give us feedback if you like our stuff. Of course, if you don't like it, you don't have to click on anything. You don't even have to watch. Also, comment down there. What stood out to you from the video? What questions or comments do you have about what I brought up? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42. Join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog here, check out some of these other things on the right. Click on this link. It takes you to our Market Outlook live video. Here you can watch on Monday, Wednesday, and Fridays at 3:30 Eastern. I do a live video here. It's a quick 10-minute video. I take a look at all the trades I've shown you in other Market Outlook videos. We talk about whether we should stay in them, get out of them. We also put on today's trade idea already. So you can check that out here on this page. You can also get to it right here by clicking on Live Trade Review in our main menu. Come down here, you can see our upcoming classes that we have. Click on View More. It takes you to our calendar with all of our upcoming classes, as well as all of our recordings for 4 years going back. Come down here and click on this heart. It opens up this tab. Hit that like button. Same thing with this thumbs up icon. Opens up this tab. Hit that like button. Again, the more you do that, it really helps us get our content out to all of our followers with how their algorithms work. That's why we always ask for the likes and the shares and the retweets. It also benefits you because Twitter and Facebook promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here. All right, let's go ahead now and take a look at what's driving the price action today. And you can see the trends that we have going into over the last 3 months, with commodities just really strong, and the gold and the dollar up there. And you can see what's down. Long-term bonds down the most the last 3 months. Emerging markets, the Qs, everything equity related down nearly double digits there. So here's this today, and you can see that trend continued today through some ups and downs, but you can see those didn't really go up and down. They kind of stayed where we opened. It was the Qs and equities that had a roller coaster ride up and down. They finished on an upswing, but small cap stocks down the most, Qs up the most out of the equity asset class. You can see commodities yields were up because bonds are down here. Gold is up. The dollar is up, and the dollar made a tremendous move. And again, we talked about this in class last week. When you look at what's really driving that UUP strength, the dollar index strength, it's interesting to look at when you break that down here, that it's not just the dollar itself. Oops, excuse me. Let's take a look at it here. It's not just the dollar itself that is just insanely strong. It's actually, when you look at, again, this over the last 3 months, when you look at this move in here, really you can see the dollar move started to the downside, or the euro and the UU. Well, let's go to UUP, the index itself. really took off here kind of in February, but it's been on a pretty steady trend for quite a while. It bottomed out there in May 25th of 2021, going forward into now. So if I were to go back around that time frame, May 25th of 2021, go to a daily chart. So you can see the dollar is doing, really, pretty well against most everybody, including the commodity currencies there. But then you can see, like at some point in time, right around that Halloween, post Thanksgiving low point. So this is where right here is where the dollar kind of peaked right before Thanksgiving, and then it dropped right after Thanksgiving. We kind of hit that parabolic peak there, but then we just kept going up. But if you notice from that point going forward, so from November the 24th going forward, and really I'd have to go the next day because that's when the dollar started to drop. You can see that the dollar is up quite a bit against the euro, quite a lot against the yen. The yen's really gone parabolic here, and then the Swedish krona. These are the two biggest. Like these two right here make up a really sizable chunk, the euro and the yen, of the dollar index. You can see the dollar's not down against like the Australian dollar or the Mexican peso or the South African rand, or some of these other currencies. The dollar's actually down against some of these. In fact, coming from here, from 128, from that particular low point right there, 128 of this year. So this is kind of after like we started. You can see the dollar is really only up against some of these European currencies. And then the yen down here at the bottom. And it's down against all these commodity-related currencies. So it's not really strength in the dollar per se. It's more weakness, especially in the euro and especially in the yen. I mean, look at the euro, and you can see it. I mean, it's just really significantly lower. Getting another cluster here, at least for today. This is actually the period that began tonight. So, depending upon how bullish we end up being today, you got a cluster forming there, and then we did get a cluster on the yen. I mean, look at that parabolic move on the yen. So it's really more of an impact. It's more of a situation of what's going on with these other currencies, more so with the dollar, which, kind of makes sense when you think we're in this really inflationary environment where commodities are going crazy. And yields are going crazy. And you can see the overbought cluster the yields got today up to 2.86%. But the dollar is not dropping, which is what you'd expect in this kind of environment, especially, again, with gold rising too, right? Gold has brought in a pretty steady upward trend since, back in that May time frame, and especially since, October, since that cluster right there, it's been on a pretty steady up climb. So how is the dollar doing so well? Because it's not necessarily the dollar itself that's doing so well. It's more the euro and the yen, especially the yen, that is doing so poorly. And the yen is just, like I said, gone so parabolic. You can see here, look at that ADX. As high as it's gotten, up to 64. That is a parabolic move that you just do not see in currencies. Look at that. Like the last time we had something close to that was here when we peaked in the spring of 2021. The dollar took off against the yen. And then you can see what happened afterwards on that parabolic move. Again, we're in the 60s here, so you have to kind of follow the 60s along. We got close to 60s a couple of times here in 2014 when the dollar really took off there and put a lot of pressure, but it put pressure on commodities. This was not inflationary, very disinflationary. You can see over here you had a stretch. Again, in 2013, into 2012, we had QE starting. The dollar really took off there. Over here, 2012, coming into the beginning of the year. And you can see what happened. Not so much here, because you still had QE going all the way into 2013 and eventually into 2014 by the time it was all said and done. It was actually right into here by the time it's October in this area that you finally had the end of QE. And then you had one more last hurrah before you had more of a decline in the dollar versus the yen. But this is a different scenario, right? The dollar is now rising in an inflationary environment, not in a disinflationary environment like we saw when we were trying to pump QE into the system and stimulate the markets there. Very, very parabolic move. And you can see on the Euro US dollar, not quite the same parabolic move because we've been in this bearish decline for quite a while. In fact, when you go out to a weekly version of this chart here, you can see the ADX, we've had some pretty good runs on the Euro. And remember, this is lagging, but the ADX is higher than it's been in a while. There's some of these other instances where you had some declines and your ADX has gotten up to these levels. We're on another, this is a little bit more steady than what we see on some of these others because your actual negative indicator is not very high, but your positive indicator is really low. And it's setting up, and again, an opportunity for a low point to form like every other time. You've got blue arrows down here on the euro relative to the dollar. So it'll be interesting to see what impact that has, especially in coordination with what's going on with bonds, with the strong rally it's getting, right? With the move down and this lagging indicator that you would expect will eventually make it peak its nose here below 10, which again was some pretty significant low points for all these other periods of time, especially when you had, in this case, not so much, but you didn't have the negative so high like you did on these others, and the ADX so high like on these other instances where we did get an established low point. And rising bonds like that wouldn't necessarily be the most bullish thing right now. All right, so from a sector standpoint, it's not surprising to see energy leading the way higher if commodities are doing so well. And then you see safe haven areas outperforming: healthcare, staples, utilities, real estate outperforming too, materials also benefiting from the commodity run, and all your cyclical areas lagging during this inflationary environment and risk aversion environment. Again, just looking at today alone, you saw it was pretty like it was a roller coaster for these cyclical areas from an asset standpoint, and then your safety haven stayed bullish. Well, here's energy staying up there. Financials had a day today. Remember, it's still kind of in the tail end of most of its major financial reports. And then there's your technology and discretionary outpacing. They were lagging earlier. They were some of your biggest losers along with healthcare. Healthcare stayed down, and then your risk off areas, real estate, utilities, staples, they were all your biggest losers by the end of the day. And it was these areas that started off strong and finished the day strong as well. That's why your Qs did so well by the end of the day today. So let's take a look at our trade idea of the day. One of them, which is in that discretionary area, and it's Nike. Nike had a really good run the last couple of days, and down today because it didn't quite hold up there. You can see the near-term line got into bullish territory, got into overbought territory there just barely. Intermediate lines in neutral zone. It's not really going in or out of either area. You do have dark green shading and a green line, but grain of salt on that, right? It's hardly like a breakout move to the upside. When you look at some of the other charts for Nike, you can see you kind of some transition candles. You're pretty low on the PPO. Again, not really breaking out, not really taking off either. If you let me remove that drawing. If I actually draw that on this decline that we've been on, here, let's go out to the market forecast and come here. Whoops, sorry. Let's go out to Nike, and really you kind of sideways here, and then we really started to drop there. Got barrier sideways neutral, and then it fell off the floor there, and then you can see that we're above the 23% retracement, but not really extending above it, not getting above 38 for sure, the 38% retracement level. When you look at some of these other indicators, like the 3 green arrow chart here, the 2-line version of it, you can see we filled in the gap between the 30 and the 50-day moving average Friday and stayed in that gap today. The 8 and 17 are above the 30, but the 8 still below the 17, even if it's kind of flirting with 0, flirting with getting above its moving average. You can see the point of control holding for a resistance level there. If you look at the DMI, you can see again, no real significant trend. The positive indicator got up there, but it's not really extending above 30, and the negative still above 25. Your RSI and your CCI are not getting into bullish territory. They're kind of in fake bullish territory there. And then, of course, you have your Bollinger Bands here. You can see, again, that point of control holding, and you're kind of in the middle of the bandwidth, but you're not really breaking through to the upper quartile, or especially not. You need to break the upper band if you're going to really reverse trends, and that's not happening. So, I mean, you got resistance in this area, and it appears resistance is holding for now. You can see you're still below the cloud, and that cloud acting as a resistance level. Again, for now. And again, you expect resistance to hold until it doesn't. And the nice thing is you're kind of at resistance. So it's either going to hold or it's going to break through to the upside. Sorry, that's going to give you an opportunity to know really quickly if it's going to break through that, if it's going to break through or not. So what I decided to do was a long put vertical spread for May, buying out of the money put at 123, selling to 120. You can see the implied volatility suggests that's easily attainable. 118 is about where it's expected to get to with 1 standard deviation. So if it falls down, if it holds this resistance and works its way to the downside, then we can get a good opportunity, because again, there's no support down below here, right? You break that 23% level, there's no volume down here, you're below all these moving averages, you're in a death cross environment. There's just nothing holding it. But if it breaks through, we'll know really quickly. So we'll be able to get out with a very small loss relative to the $450, that half a normal position size, but getting a couple gram potential reward if it does indeed hold this resistance and bounce down to the downside. So speculative return for something that's in a pretty strong bearish trend, that's kind of moving to the upside, but it doesn't look like it has enough to get through and break the trend, right? And it looks like it's been enough to bounce off of oversold technical levels, and now may hold resistance and make a new leg lower. And that's the expectation, right, with the trade that we're looking at. And if it doesn't work out, then of course, like I said, a very small loss compared to the potential reward that we're seeking in the next 32 days. So there's our trade idea for today. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread there with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video down below. Subscribe to our website at marketscholars.com. Like us on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.